building an inclusive digital payments ecosystem. We should welcome our moderator, Ms. Shehnaz Ahmed, Senior Resident Fellow and Lead Fintech, Vidhi Center for Legal Policy. Welcome, Ms. Shehnaz. Mr. Anshul Saxena, Specialist MicroSave. Mr. Dhyanesh Bhatt, CEO, Gramcover Technologies Private Limited. Mr. Abhinav Sinha, Co-founder, Eco India Financial Services. Mr. Avinash, MD and CEO, Zaggle. Welcome all of you. Over to you, Ms. Ahmed.
Thank you so much. Hello, everyone. Welcome once again to this session on challenges in building an inclusive digital payments ecosystem. Over the past few years, I think we have seen how technology-driven innovations have transformed the payments sector. Now, while once dominated by in-person cash transfers and paper-based checks, today we are witnessing payments happening digitally, remotely, and on a real-time basis. Now, from a financial inclusion perspective, I think these developments are significant because typically payments are the entry point in the use of financial services by those that have traditionally remained unserved or underserved by formal banking channels. Further, I think the COVID-19 pandemic has also underscored the significance of digital financial services, perhaps even pushing consumers towards digital adoption of financial services. However, what I do feel is that, like with any other technological innovations in any sector, such developments in the financial sector has also raised certain concerns and challenges, specifically concerns around safety of payments, safety of the usage of personal data, etc. And perhaps these concerns get more heightened when there are disparities in adequate access to technological infrastructure, when there are disparities in digital and financial literacy. And perhaps this also kind of leads to concerns about how certain segments of the population may further be excluded from the formal economy. Now, despite these challenges, I do still think that there is enough literature, there is enough evidence to show that there is a positive correlation between digitalization in the financial sector and financial inclusion. And in fact, digital payments can in fact be a entry point for the financial inclusion journey. Digital financial services can essentially also lead to a lot of support in other kinds of financial services, whether it is digital lending or insurance, where payments data from consumers might be useful to kind of think about new ways how to assess creditworthiness, design more customer-centric insurance products, perhaps. So I think all in all, if leveraged, digital payments can definitely open up opportunities to build a more inclusive and accessible financial system for all. Now, to deconstruct some of the challenges that is there in building an inclusive digital payments ecosystem and also a financial services system in general, and to talk about potential solutions, we have with us today a stellar panel. And in terms of the format of today's discussion, we will start with the opening remarks by our panelists, and then we deep dive into some of the specific issues. Depending on the availability of time, we'll also try and take up some audience Q&A. So please feel free to type in your questions. So without further ado, let me go to my panelists here. I'll request the panelists to perhaps keep their opening remarks slightly brief so that we can also dedicate some time to audience Q&A. So Avinav, let me start with you. Your initial thoughts on today's topic of discussion.
Thank you, Shehnaz. My name is Avinav. I started Echo about 14 years back. We empower small businesses, sellers to scale their business and get access to first-time credit. In order to achieve this, we give them a digital store. We call it Echo Store, where we digitize small businesses and also give them earning opportunities. So apart from, so imagine a retail outlet, so pharmacy. So apart from them having physical inventory to sell to their consumers, we also give them a digital store of inventory which they can sell to their customers. So we not only digitize their business, we also add inventory for them to kind of increase their enterprise value. And because these are small sellers, we've been able to create a proprietary underwriting algorithm to give them access to credit as well. Across 14 years, we have close to about 300,000 sellers on our platform, and these sellers have catered to about 3.5 crore consumers over the last 14 years. And you're absolutely correct. Payment definitely is the gateway to to financial inclusion. I would only like to reiterate the importance that we have learned of a couple of things over the last 14 years. One is about UI and UX. We cater to the mini or the micro sellers selling to low and moderate income customers. It is super critical to really understand what user interfaces and user experiences have to be created for them to get onboarded into different kinds of payment products and different products and services. It is also extremely important to harness the data that is getting collected on platform like ours and give them higher order services. For example, data tells us that should we be sourcing insurance products for these customers or sellers? Should we be doing credit for them and things like that? So I think I would apart from all of us building businesses, which definitely make a dent to financial inclusion, I think I'm certain that all of us have learned a lot of our lessons around UI UX data and using cutting edge technologies like AI and ML to kind of deliver really higher order products and services to the customers and sellers that at least Echo caters to. Thanks.
Thanks, Abhinav. Thank you for sharing your experience. Moving on to Dhyanesh.
Hi, Shehnaz. At the outset, would like to thank IAMAI for this opportunity to share my thoughts on this very interesting topic. And as we discussed yesterday, I come from Gramcover, which is a rural-focused insurtech platform, and kind of I'm going to look at this whole digital payments ecosystem from the view of both insurance as well as rural. So basically, if I look at the role digital payments have played in, I would say, democratizing or making insurance inclusive, I think it's huge. So I go back to say 40 years, so 20 years earlier or 15 years earlier in 2005, when I just come into the insurance industry, I used to hear the story about how corporates, when 20 years back, when there were only a few insurance companies, had to really go door to door to insurance companies and say, really, I have this huge asset that I need to insure, please provide me terms. And there were only a few underwriters who could actually provide capacities and underwrite those kind of risks. And then the entire transaction was physical. A cut to chase in 2005, 2010 period, there were a lot of insurance companies in the market who were working with these corporates, and corporates have become price customers. So there was no dearth of insurance solutions for the corporate customer. But rural India, which is still today, I would say home to a large part, 65 to 70% of India's population still has little or no access to insurance. And I think in the last couple of years, it is digital payments that has paved the way for getting insurance, to the last mile. So now there are models around do-it-yourself insurance. So companies like Policybazaar are there for the urban markets. And then there are assisted tech models like ours, where we partner with rural point of sale persons, thereby giving them an opportunity to earn a livelihood and also create access of insurance to the last mile. And over the last 3 years, we've seen significant traction. And last year, we worked with approximately 1.8 million customers, providing them insurances across various product categories, whether it was crop insurance, whether it was livestock insurance, whether it was asset insurance, motor insurance, health insurance, etc. And digital payment has been a key, I would say, enabler for this, because it kind of makes the entire process of collections of premium completely online, right? And it kind of then enables a completely online ecosystem, whereby not only collection of data, but also comparison of insurance companies, payment of premiums, and getting the insurance policy to the customer becomes a complete digital process. And at the same time, on the other spectrum, when you look at claim settlement, if I go back maybe 5-10 years, most of the times there were the claim settlement was done via text, right? Or demand drafts that were sent across to customers. It was a physical process, a lot of inefficiency. But today, 99%, I would say, of all claim settlement also happen digitally. And I think insurance industry has been one of the, I would say, fast adopters of digital payments. And it's a huge industry per se, right? So if you look at general insurance, approximately 200,000 crores. If you look at life insurance, maybe around 500,000 crores. These are the kind of premiums that are there in the industry. And this entire industry has kind of moved a lot towards digital payments. And I think in the years to come, this will again further make the whole penetration of insurance more and more in rural India as well. Coming to some of the challenges, I would say, as mentioned by Abhinav, awareness about the insurance products or financial insurance, financial products. Also, the whole challenge of access and servicing of these particular products has been a constant learning for us. Similarly, in terms of engaging with our network of partners, ensuring that they are in the first case activated, then they are kind of engaged, and then they are optimized. I think these are three very critical branches for us to kind of focus on, and I think that will continue to be an ongoing focus area for us going forward as well. Thank you.
Thanks, Dhyanesh. Thanks for also pointing out the correlation between digital payments and the insurance sector and how perhaps this can also help in the financial inclusion journey. Avinash, I will turn to you now, your opening thoughts on today's session.
Thanks, Shehnaz, and thanks IMAI for this opportunity. A very interesting topic and very relevant in the times that we are in. Right? So just to give you a brief about what we do, we are a B2B fintech company digitizing spends to drive growth as well as unlock value. Today, we work with over 4,500 business customers. We have about more than 4 million users on our platform. So the platform essentially caters to a very wide range of needs, from expense management to rewards and loyalty. And a lot of the solutions that we have implemented in the unbanked or underbanked space have all been around how large brands are looking to reward their users. Right? These could be dealers, these could be distributors, these could be retailers, these could be influencers, and these could be consumers in these segments. So a lot of the solutions that we've created and a lot of market leadership that we've got with a lot of brands, both FMCG brands as well as market research companies, tire companies, right? So companies like CRCA, Goodyear, Bayer, IFCO Tokyo, Ipsos. The reason why these companies work with us is the solutions that we create are focused on understanding the needs of our end users, right? So, for instance, if you are catering to a rural audience, right, there's no point in trying to create a solution which is non-vernacular, right? You need to understand what is the comfort of that audience. It doesn't mean that they don't know English. It means that they are more comfortable in a local language. And if you can't cater to your customer in a manner which makes them feel good and which is comfortable for them, then I think you're doing a disservice. So little elements like that, how are you engaging with your customer? How are you interacting with your end user? A lot of the influencers that I mentioned to you don't necessarily mean the high-end influencers. It could be, say, for example, painters for the paint industry. We work with a lot of companies in the painting industry, right? So Berger, Nerolac, Akzo Nobel. So painters are a very big influencer. Similarly, for carpenters for the plywood industry. So when you're catering to this segment, are you designing solutions, to Abhinav's point, which are relevant to that segment, and are you communicating to them in a manner which is comfortable for them and which makes them feel good, rather than trying to create a system which sort of is not welcoming? Our endeavor is always to create an environment, a solution which is welcoming towards this audience, right? And when you do that, I've seen in the last 10 years, the uptake is phenomenal. Much better than, and the stickiness is much higher in this segment compared to a more affluent or more urban segment. I can dwell into the reasons for that, but we've seen the loyalty is much higher. The willingness to pay is also much higher, right? And I don't know what my fellow panelists believe or have seen, but in our experience, their willingness to pay is also much higher. But I think the key is to speak to them in a manner which is welcoming and in their language, which is taking care of their needs. I think that's the key. Thanks.
Thanks, Avinash. I think you've raised an important point regarding underscoring customer needs while designing digital payment services. Moving on to Anshul, your comments on today's discussion.
Thanks, Shehnaz. Thanks to the IMA team for having me, and thanks to the panelists already have put in solid thoughts there. So I work with MSC and we run the lab for financial inclusion along with IIM Ahmedabad, and we kind of have incubated 33 startups in this space, both fintech, skilling, livelihood companies, and work across Southeast Asia and Africa in just this domain. So I have a fairly good understanding of the global emerging economies and how they are coping with the COVID, with the pandemic, and how the financially excluded folks are, coping with the system as a whole. So coming back to India, we absolutely digital payments has been one of the shining stars, and we did see a lot of competition with cash when the pandemic began. In fact, cash transactions kind of overgrew the digital payments, so to speak, during the first quarter of the last year when the pandemic had struck and nobody knew what to do. So the immigrant workers and all, but instead of remitting the money as they usually would, had started saving on to cash reserves and switched to just interacting in cash to start with because they didn't know. And digital payments in the inclusive space consists of majorly three things. One is a remittance. The second one is the P2M, payments to the merchants, and the third one is your billing, electricity bills and mobile bills and all that, even your DTH bills and all. So these are three major buckets where the digital payments have been happening. And what we saw compared to last March to today is that there has almost been a V-shaped recovery of digital payments, right? So while the total transactions in April of 2020 were 3.03 billion, today they stand to be around the figure of 6.5 billion per month. And but this has not been a straight line V-shaped recovery. It has had its fluctuations. It has also gone down by 1.1% month on month from the previous months and all. But we do see a continual increase now since November or December of last year, and this is a good trend, and this has been going on. I would also like to going forward in this conversation would like to build on two customer personas that we saw from the inclusive space. One is a lady called Punyaka, who does not have that big digital literacy, so to speak, and she works on a feature phone. Then the other person is Madhuri, who is an Uber driver, and her literacy levels are fine. And so these are the two, and she uses a smartphone, and these are the two kind of people that we kind of benchmarked while studying our studies and gathering insights. So I'll go deeper into that, but I do agree with the panelists. They say that copycat solutions don't work in India, right? UI UX is very, very important. Vernacular, not THET or pure Hindi, but a English kind of a combination works. And literacy, financial literacy, has come to the fore, even through assist models or through digitized models that need to be there for better uptake of digital payment systems, or for that matter any fintech oriented solutions. However, we do think that physical or assisted models are not going away anytime soon. They still need it because of the structure of the society, right? In the exclusive space, so to speak. So while we go on with the conversation, I will try to throw more light on this and hopefully let my audience get more insights on this part. Thank you.
Thanks, Anshul. I thank my speakers for actually setting the context for today's discussion. A lot of issues have been brought up, and I think are very, very pertinent issues. Let's now, I think, deep dive into some of these specific issues. Starting with you, Anshul, I think you've talked about how customer needs should be an important point when we are designing or talking about inclusive digital payments ecosystem. Now, you have been working in the financial inclusion space. When we talk about an inclusive digital payments ecosystem, obviously we have to think about customer segments that have traditionally remained unserved or underserved by the formal financial sector. Now, in designing from a customer's perspective, in designing services for such customer segments, what are some of the challenges or factors that one has to keep in mind while designing an inclusive digital payments ecosystem for them? Anshul,
Shehnaz, what? Am I audible now?
Yeah,
okay,
yeah, you are.
So Shehnaz, I think that, thank you. So I think there are a few challenges, and the good point is they are being addressed as we speak. So the level of awareness of the fintech solution builders has also, increased a lot in the last 1.5, 2 years. But you have to realize that there are two kinds of Indias. One is India, the other one is Bharat. Even in that Bharat, there are 2 or 3 sub-Bharats, right? So there is one segment which is 15 to 32-year-old folks who are tech savvy in the sense they consume the content on the net, YouTube videos and all. And then there is the segment that is above 35 years of age, which has traditionally done things, in the physical sense of it. And then there is a third one, which is in the cusp of rural urban areas where they are not inclined to do these things, but if they are forced, they will quickly, learn about digital transactions and how to do them. So the challenges basically are that, a year ago, nobody was actually thinking about these guys. They were building solutions for the elite folks like you and me, and copying and pasting them down, assuming that the other Bharats will also adopt it. So that has been a realization that it's not as easy. For example, just a simple example would be a shopping cart icon, right? You and I understand the shopping cart icon and its importance, but does that rural person understand it? Does he have any mall nearby who will understand that it's a checkout option? So these are the very nuanced things that the builders were not, fintech builders were not thinking about. So this has been a major hurdle. Having said that, in many instances, we see that the fintech folks think that digital is the only solution, right? If you make good UIs, UXs, you are solving for them. But that is not entirely right. There is always going to be a physical, influencer they will go down with, especially if it has to be gender inclusive. The ladies, don't use the cell phones as much individually as they would like to. It's in the hands of the children, or they go to their husbands to make the decisions on the systems and even let them use it for them for their own accounts. So all these nuances of how different types of strata in Bharat are using or perceiving this shift is important to know. And please, we should all be aware that this has been a paradigm shift for them, right? They used to interact in a more physical manner. They used to handle out cash, but now they are being forced in many instances to interact through digital means, right? Even your customer onboarding, where your salesman would go and lure them to get them onboarded into the fintech systems, it has not been possible since the last 18 months. It has been done through, yes, video KYCs or telephonic calls and or even through WhatsApp, but still that level of interaction, human interaction, has not been as good as a pre-pandemic kind of a level. So we have to understand these aspects and use technology to include them into our lives, not the other way around, right? We expect them to adapt to the digital financial solutions, but that is not the case. We have to include them into our spaces. That has to be the fundamental understanding in this. And also, yes, some of the reasons have already been pointed out. Copycat solutions, not understanding the customer base. Also, we think of LMI segment, low to moderate income segment, as a monolithic segment. It is not. It varies from geography to geography. It varies from age group to age group. It varies a lot on the basis of gender. It also varies a lot based on how good government schemes have been implemented in those areas. So all this kind of helps, and you have to leverage all these things and understand them when you're scaling up to another area or to another segment in this same LMI customer base. Yeah.
Thanks, Anshul. I think I completely agree with you, given the socioeconomic barriers that do exist in our society today. So perhaps an exclusive digital reliance on digital this might not be really the solution, and there has to be some sort of physical presence or physical touch points, which will always be there. Coming to you, Abhinav, I wanted to specifically also discuss in terms of the impact of the pandemic on the digital payment sector. And how has the industry response been to that? I know you touched upon some of the work that Echo has also done in the sector, but it will be great to also kind of get a sense from you in terms of how has the general industry response been, and especially towards customer segments, the vulnerable customer segments and segments which have been badly hit by the pandemic, perhaps.
Sure. Thanks, Shehnaz. So broadly speaking, I think there's a lot of news in the media that the digital payments in general have gone up. So certainly it has gone up, right? Now, just to get a little bit further into the LMI segment, we've definitely seen Echo has witnessed at least anywhere between 5x to 10x growth in its business in the non-metro regions of the country, and it has just about seen getting back to pre-COVID levels in the urban areas. Now, this is specific to the customers that we deal with. And so just for the entire audience, almost at the same levels of pre-COVID in the urban areas, but 5 to 10x increase in non-metro areas. That's what we've noticed. So, when I say that we are just about, pre-COVID levels in the urban area, it means that people did go through all the ups and downs, which is lost their jobs, got salary, diminished salaries, etc., got impacted by first wave, got impacted by second wave, and are resilient enough to get back to pre-COVID levels. So that's where we've not seen growth, but we've kind of seen sine curve, right? Down, then up, then down again, and then coming back. Rural India, non-metro, the way we classify it, has consistently seen growth. That's one point that I definitely want to share with everyone. Second thing that I would like to share here is that COVID definitely, I heard this in another forum. That seems like COVID is the new CTO, right? It had probably pushed massive amount of digitization across all companies, and it's true even for Echo. For the last 14 years, all the 2.5 lakh sellers that we have onboarded, we used to actually meet them in person. So I used to have a sales team in different parts of the country who would go meet them, prospect these sellers, and get them onboarded, sign them up, etc. By the way, through post-pandemic, I wish we get to post-pandemic, but through this period of the last 12, 14 months, we haven't, because I never thought that it was principally right for me to stay in my house and ask my sales colleague to go down into the roads to acquire sellers. We've completely gone digital. So when I say we've gone digital, actually my sellers have gone digital. They are ready today to get acquired through digital mediums. So they get acquired through digital mediums. We train them through digital mediums. We get them started for their business on Echo through digital mediums, which actually got us to learn a lot about UI and UX. And, for example, the user experience for the seller pre-COVID was that somebody from Echo would kind of meet them, prospect them, train them, and get them started, right? Now, the user experience today is if they see an ad of Echo on Google or Facebook, they go to Play Store, they download it, and the user journey has to communicate to them the value proposition of why they are signing up to Echo, and they have to get their business started. Certainly to about 10-15% of them or 50% of them, we give them a call and we help them through the journey of it. But there is a lot of digital adoption or readiness for digital adoption that we see in our customer segment as well. So we got pushed because of COVID, and so did the customer get pushed towards digital. And this is where I would again like to reiterate that how important was Echo's learning when it came to UI and UX. And I'll give you an example. I asked one of the helps who actually works at my house. She earns digitally through me. I pay her digitally. She has a smartphone. She has a bank account. And I asked her, how do you recharge your phone? She says, I go to the retailer and I recharge my phone. I asked her, why do you do that? She said, and in Hindi, she said, nahi aata hai. She didn't say that I don't have digital money. She said, I don't know how to do it. Now think about it. The big tech companies are producing assistants for us. There is Alexa and Siri for all of us, but where is the assistance for the customer segment that we just spoke about? And to Anshul's point, sure, you and I need only voice assistance. Somebody needs a little bit more assistance where it is physically voice enabled, if I can say so, right? And I think Dhyanesh's experience of selling insurance in rural areas is pretty similar. So I think assistance, we need assistance. And absolutely the big tech are building assistance for us. And some of us in the panel are creating assistance for the customer segment that we are catering to. So, and it's absolutely the point of great UI and UX has to be delivered. And again, I don't want to diminish this point, but one of the things that because we kind of work with sellers across the country, and particularly very large number of sellers in non-metro areas, what we have seen that India probably is capital of entrepreneurs in the world. I think everybody is very enterprising in India. People get their businesses started, but because of lack of access to capital, are not able to scale their businesses significantly. And therefore, at least Echo, apart from giving them the infrastructure to sell more, we've also kind of doubled down on our infrastructure of giving them credit. And because what we see is that access to credit is fairly limited within the country, and because we kind of get a lot of transactional and engagement data of our sellers and our consumers on our platform, so we definitely want to democratize credit going forward in the next 14-15 years of what we want to do in Echo. And many different things that we have noticed within the pandemic. One more interesting aspect that I will share is that through the last 14 years, the customer were walking into my seller outlets to consume products and services. It was the first time during COVID that the sellers were ready to go to the customer and provide products and services. And we were able to pilot a doorstep service of financial services. And by the way, people build doorstep banking services for customers like you and me. Imagine doorstep services being delivered for the masses, low and moderate income customers across this country. And there are sellers on our platform who are happy to kind of sign up, go to the doorstep and provide them basic banking services, basic financial services, sell small insurance policies. And what we've realized is that while Echo was, a predominant category of sellers on Echo was retail outlets, 70% of the sellers that we have signed up post-pandemic, or rather during the pandemic, has not been retail outlets. These have been absolutely individuals, insurance sellers, college-going boys and girls who just passed out from college, homemakers, the retired government servants. They've all signed up because they believe that it is possible to service their community with a certain product and services. And it was important for us to kind of learn quickly, sign them up digitally, learn what is needed to be done from a UI UX perspective. And now the mission is really, how do you kind of take care of these sellers on our platform and help them grow their business? So I hope I answered the question of how significantly COVID has impacted Echo, of how we see our business, and what we've learned from our customers as well.
Thanks a lot, Abhinav. I think you've helped us to understand how businesses are learning from the pandemic, and also for underscoring perhaps the behavioral change that COVID has brought to not vis-a-vis just customers, but also perhaps for pushed businesses to think more digitally. We've talked about the industry response, but I also think that the pandemic saw the government and regulators also emphasizing on the adoption of digital financial services. In India, we did have the central bank as well as the government talking about or trying to push policy reforms for uptake of such digital payment services as well as digital financial services in general. So turning to Dhyanesh here now, you come from the InsurTech background. I wanted to get your thoughts on some of the policy or regulatory responses that you think will, or rather have been instrumental in creating a more inclusive digital financial ecosystem.
So thanks, Shehnaz. And I think before I jump into what are potentially the regulatory I would say responses that would kind of help make the entire ecosystem or landscape more conducive, I'd like to talk about some of the risks that I feel are faced by the financial ecosystem, as we see the models evolve, right? So one is obviously we have now so many more players coming into the financial ecosystem. Earlier there were, some of the banks, some of the NBFCs who were there on the financial ecosystem space. Now you have a lot more technology companies who are kind of doing a host of activities. Some of them are focused on the core activities like lending and payments and all of that. Some of them are kind of providing support services to make the entire system more enabling. So now there are a host of more, I would say, tech-enabled companies that are there, and I think it is important to ensure that all of these are on the right side of regulation and compliance. Second is, you also see, especially on the rural side, a lot more role of assisted tech, as Abhinav also mentioned. There are a lot more people now distributing various financial products, whether it is in terms of lending, whether it is in terms of remittances, whether it is in terms of other financial products, including insurance. There is a lot more of the rural public or ecosystem present in the entire setup. Third is obviously now more and more customers are coming into the purview of this, right? I think formal financial services have reached out to a larger set of people through, new age fintech and digital ecosystems. And there, the challenge is that a lot of these customers are actually new. They don't really have a background of, the products that they're using. And I would say that these are unpredictable or unknown costs that we'll kind of, probably realize over the next couple of years as more and more people come into this and learn to start navigating the system. And hence it is very important to have like a simplified setup in place. And last but not least is, one of the points that you mentioned around the challenges of data privacy and data security. I think the amount of data that we are generating and storing and collating is humongous nowadays, and especially to do with financial transactions data being stored. I think it is imperative that but that is one of the key challenges that is being faced. So in light of some of these challenges that we see, I would say in terms of some of the regulatory instances or regulatory interventions. One is obviously formalizing the relationships between the financial institutions who are involved in this entire setup, the tech companies, and also the partner networks that are being created. Because a lot of times these are different parts of the ecosystem. The second would be to build consumer protection in a larger way. There is a lot of work that's already been happening on this front, but I would say to build consumer protection in a larger way, because even today, if I look at some of the people from the LMI segment that I know, there is an inherent distrust because they don't really understand how this entire transaction is happening. And so there is a distrust in the use of, digital financial options, right? So I would say to build trust in the system itself and to kind of, promote usage, I would say consumer protection is another area where there could be policy interventions coming in handy. Third would be the interoperability of various technologies, which should make the entire, I would say, ecosystem more geared towards innovation, faster go-to-market, and also foster innovation. And last but not the least would be to ensure that while there is this whole spate of tech-enabled financial inclusion happening, we ensure compliances of things like the Anti-Money Laundering Act and the CFT, to ensure that the system is not being taken for a ride, and everybody is kind of ensuring that the inclusive part of financial and digital ecosystems is being leveraged, and we are able to take things to the next level. Thank you.
Thanks, Dhyanesh. Thanks for highlighting, I think, some key policy reforms. I think these are some important policy reforms that you have highlighted. Now, we've talked about the industry response. We've talked about possible policy responses, but I think our conversation remains incomplete unless we talk about a discussion, or we have a discussion about the partnerships that have come up in the digital payments sector. Now, Dhyanesh has talked about how there has been an entry of new players, specifically tech-focused company in the financial system. And payments perhaps has been the first sector to have been disrupted by these new age fintech companies. Avinash, I'd like to turn to you here. As a fintech company, how do you see bank fintech partnerships? How can they be leveraged to perhaps build a more inclusive financial sector?
Thanks, Shehnaz. That's a very relevant question. And if you look at how the ecosystem has shaped in India, how the regulator has also sort of guided the ecosystem, there's a consistent theme that there's a emphasis and encouragement for partnerships between banks and non-bank entities, right? And that can be seen through the thread of regulations, that can be seen through the thread of various initiatives that are taken by the government itself, right? I think it's a right model for a country like India, where no one player or no one entity can cover the entire spectrum, whether it's the breadth of the country or the diversity in the country's consumer personas itself, which Anshul was mentioning. It's very unique, right? The key is to be able to create trust between the banks and the non-bank entities. And I want to highlight, there are some banks who work on a model where they look at partners as equals, right? So, for example, we work with multiple banks, but the banks like Yes Bank, RBL Bank, IndusInd Bank, DBS. These are banks that we have seen have operated on a manner where they are looking at partnerships on an equal footing. And, those are the partnerships that I believe are sustainable and partnerships which bring real value to the consumer, right? And those are some of the guiding principles when we partner with banks, we look for banks who are looking at a win-win sort of a scenario and who are looking to co-create solutions rather than a fintech partner just being looked at as a distribution arm, right? And when that happens, that a fintech partner is just looked at as a distribution arm, there are three challenges, right? One, the quality of the solution itself is so distant from the user, right, that you lose very important insights as to what this user or this cohort is looking for, right? And hence you design the solution incorrectly, right? Two, when you do that kind of a pure distribution model, you are disincentivizing the fintech to use their innovative capabilities, right? Fintechs inherently are possibly more nimble than traditional banks, given our size, and also have some insights in the market, which they possess, and that's why they've got into the space in the first place, right? You are not leveraging all that the partner can bring to the space. The third, and which was, again highlighted by all my other fellow panelists, is the power of tech, right? And if you look at banks, while banks have fairly good tech systems, etc., there's a lot that most banks themselves would recognize, right? Their platforms are fairly need to catch up a little, I would say, right? While the Indian banks are much better than the US banks, where many banks are still running on mainframes, etc. So I will give that credit to the Indian banks. But still, if you look at the cutting edge of technology, many banks are not yet there, right? Whether it's leveraging cloud, whether it's AI, ML, and fintechs can really help create those user journeys and user experiences and interfaces which allow banks to leverage that, the power of tech. So I think partnerships which are win-win, where there's a concept of co-creating, really tend to have long life, and they tend to bring great value to the ecosystem.
Thanks. Thanks a lot, Avinash. I think our speakers have highlighted the factors and issues that impede India's journey towards building an inclusive digital payments ecosystem, and has also helped us understand the role of the industry and the role of different players and policies in supporting such a vision. We'll quickly move on to some of the solutions now that can be there. We are running out of time. We have 8 minutes, so perhaps I'll request my speakers to keep their responses very brief. Anshul, coming to you, in building a digital payments ecosystem that is accessible, inclusive, obviously we have to take into account vulnerabilities of customer segments to financial fraud, cybersecurity risks. And keeping in mind the broader theme of today's conference, how can technology be leveraged for risk mitigation and fraud detection?
So yeah, that's a great point to be pondered upon. What we think is basically, yes, Avinash and even Dhyanesh and Abhinav have pointed out, AI and ML will play a big role. However, so there is one thing that is called the intent, right? Even the guys who are borrowing money, you don't know the intent whether they'll repay back or not. So that's another kind of fraud which is much harder to detect, because these folks have good credit histories, right? But you can never be sure whether the previous pattern of repayments will apply to the future. So what I've seen personally in this space is there are many tweaks to the algorithms that are coming down, which are focusing on not just collecting data parameters from, say, LinkedIn or your bill payment histories and all, but they're also putting in psychometric analysis or tests in those tools to detect what is the right amount that this guy should be borrowing, and what is the kind of cycle that will be more conducive for him to repay things. That is one. The other thing that you and I probably almost encounter almost every day is the phishing attacks and all. Somebody calls us, tells us that, so your account is in danger. Please share your credentials with me so I can repay that. So that, just understand this point, that we are fairly well into the system, right? We understand that this is a spoof call, this is not valid, but this is not applicable to many people in the rural areas or in the LMI segments, so to speak. So I think a lot has to do building up solid systems using AIML, yes, is one way to go, but a solid, gamification or financial literacy, if you will, is required still, where, influencers or trusted folks can go out and teach those things to the LMI segments. And why I say that is because, see, if you go to a suburban Pune, and you look at the SHG groups, the self-help groups, which are basically run by women for women, you will see that wherever these women groups are very proactive in, advocating about bill payments and all through digital means, there's a lot of awareness about how your data should be stored, how you should not share your passwords and your OTP pins with others, and also the level of interaction with the system and inclusivity has increased by many a mile. Whereas where we don't find enough financial literacy hotspots, there is a problem there and it needs to be addressed. So how do we address that? I think the fintech folks who are running the companies know it best. And if we can play a part in educating the users in a more holistic manner, then just about our own fintechs and our solutions is the way to go. Secondly, I do think that the upcoming account aggregator systems that have been, so very well laid out will play a major role in mitigating those frauds. For example, we can kind of aggregating data from different sources and collaboratively using it. So first of all, these financially excluded folks do not have much data, digital data, for me to decide upon, right? That's where in our sense the banks fail, and that's where they want to leverage the power of fintechs, whether they know it or not. But if you can combine data from different sources on the same person, you have a much better and much clearer picture of how vulnerable he or she could be to frauds, for one, and whether this person has an intent or has committed a previous fraud or not. So I think all this adds up. We also need to understand how to store data properly, not only as an account aggregator, but also as users of the data or providers of that data to other companies. So simple practices like not keeping your credit card numbers at the counter for others to see could be huge steps in mitigating those frauds. So I think a combination of common sense and technology that's coming up with a solid blend of collecting data from various sources could be the next version of how we can safeguard and enhance inclusivity version 3.0. Thanks, Shehnaz.
Thanks, Anshul. Now, when I often come across is that how financial service providers design their products that can address the security risks, but at the same time, it does not adversely impact seamless customer experience. So, Avinash, coming to you here, how do we balance consumer convenience and experience with security concerns in designing digital financial services and products?
See, this is a classic conundrum, right? I mean, you don't have a perfect answer to it. It's perfection is unattainable here, right? You try to always optimize, try to figure out how you can get to that sweet spot where you have enough convenience and a high degree of security. But I think where if there is a choice to be made, we have believed that we always tend to make the system more secure. Rather than err on the side of making it more convenient for the customer. And I'll explain why I mentioned this, because one of the key reasons why financial inclusion has not yet reached the levels in India that it should is the inherent distrust of the average Indian on the fact that you can transact in digital money beyond the India and looking at the Bharat, right? And I think that trust comes when they actually go ahead and transact once, twice, 10 times, 100 times. And, each time the transaction goes through as expected without they losing money or any fraud happening, right? So even if the process is a little bit more cumbersome, so I would say it's a 51, 49, right? You do a 51 on the security and 49 on the convenience and as you get to know the user more, you possibly can go ahead and open up different ways of providing them convenience. So, for example, in terms of very simple things like what the transaction limits are, right? One is the limits that are set by RBI and the banks. We also set certain thresholds and limits of what various users can do. And as we get to know how their behavior patterns are, what the heat maps are, how are they looking at it on their screens, what are they doing on their screens, we tend to then start to open up things basis their behavior patterns. So I think there's a lot that tech can allow you to do, but in the interest of time, I just say it's a 51-49 in favor of security versus convenience.
Sure. Thanks a lot, Avinash. Can we just have the last words by Dhyanesh and Avinav? I just Just Abhinav and Dhyanesh, I think just closing remarks perhaps on how do you see the industry working with the policymakers in trying to support India's journey towards building a more inclusive financial system? Abhinav, maybe you can give us like from a payments perspective, and Dhyanesh can then take up from an insurance perspective.
Yeah, I think there's a lot that private entities can do working with the government. I think currently there seems to be a two-tiered approach, where a lot of things get kind of open for the banks first and then kind of for the fintechs. I would, I think the fintech industry is fairly mature now in the country. We're not talking about 2008, 2005. We're talking about 2021. I think this approach can completely be let go of. I think we've completely demonstrated that there isn't a reason for a two-tiered approach here by the government. That's one. And there are a couple of examples. For example, when the government does direct benefit transfer, they do it to the bank accounts, but they don't do it to wallets. They can totally do it to the wallets, right? I'll give you another example. For AEPS, which is a very Aadhaar-enabled payment system, you can only integrate it via a bank. I can't, as a fintech, integrate directly to NPCI. So I think this two-tiered infrastructure, two-tier treatment, I think that can be completely gotten rid of. The other thing is that, especially because we kind of work with really small businesses. I think, we talk about ease of business, but real ease of tax filing, for example, how, what we deal is the kind of SMEs or small sellers or small businesses that we deal with. They're all informal, right? If there are 5 people working in their companies, all get paid in cash. Now, and this is a statistics, which is very, very, very glaring on all the fintechs. That's the great opportunity, at least we look at. 80% of working Indians continue to earn in cash. Now, the question is, I am very strong believer that Indians don't love cash. I'm a very strong believer of that Indians don't love cash. The point is that is it easy to actually convert yourself from cash to digital? And I think that's where the government needs to step in and really provide, tax reforms and ease of business reforms for very, very small businesses to actually go digital. So I would only restrict myself to 2 things. Ease of doing business to the real, they have to, even the government needs to be thinking about UI and UX. And second is, don't treat us as second set of fintech providers. I think we are the premium group here. We are just representative here, but the larger group of people who will bring financial inclusion going forward. I'm certain about it.
Thanks, Abhinav. Dhyanesh, over to you. I think you're on mute, Dhyanesh.
Yeah, I was saying very well said by Abhinav, and I'm just going to focus on 2 or 3 things. First is obviously the digital literacy part. I think there is a lot of work that can happen there, especially on insurance or even on the other financial services where the industry and the government can work together. I think it is something that no single entity can, attempt alone and successfully administer in a very short period of time. And I think a partnership between the government and industry would be the right approach here. The second would be simplifying the products that are available. I speak from an insurance front. We have seen this happen in the recent past, where the regulator actually came in and said, this is the product that insurance company should be looking at because it is in the interest of the consumer. And the insurance companies are free to price and distribute the products in the way that they want. But to ensure, because there is a little limited understanding of insurance, so to say, so to ensure customer rights are being protected, the product was simplified and standardized. And then, there were multiple options provided to the insurance company as to how they wanted to kind of, take it forward. So I would say simplification of the product and transparently distributing the same would be, again, could be a joint initiative where the regulator and the industry could kind of, get together and play a role. And last but not the least would be digitizing the ecosystem, right? So let me give you an example. Say I'm a farmer in Maharashtra. I have a piece of land of say 2 acres where I'm cultivating sugarcane. Now, if there is ideally in a scenario which is completely digitized, I would say I should be able to go online to a platform, maybe talk to a Gramcover, say I want insurance for the crop that I'm cultivating against certain perils like excessive rainfall. And then Gramcover and the insurance company should be able to pick from the digital land records that I own this piece of land, so that information is correct. They should be able to look at satellite imagery and say, yes, this particular crop is being cultivated because I can make that out from the remote sensing data that is there. I should be able, and then they should be able to give me a digital contract with a blockchain at the back end which in the case of some unfortunate event will automatically trigger claims which will come to my bank account, right? So I think, or my wallet, as Avinav was mentioning, right? So I think there is this need to digitize the entire ecosystem to a certain extent, which will really push the uptake of digital financial products also, because then it just becomes so much more seamless rather than physically going and trying to get various legs of the physical or the financial transaction done. So those are my 3 points that I would like to talk about. Thanks.
Thank you, Dhyanesh. Unfortunately, we'll have to end this engaging discussion here, but I really think our panelists have not only highlighted the pain points, but I think some very interesting possible solutions have been pointed out. And I really thank my panelists here for their valuable insights and for the audience for joining us. Over to you, Shinti.
Thank you so much. Thank you all of you for such an insightful session. Thank you, Shehnaz, for moderating it so well. I would like to give a special thanks to our special session partner, Refinitiv, Gold partner, Reacta, Bronze partner, Onfido, and Knowledge partner, EY. Thank you, all of you.
Thank you.